Welcome back to another weekly market and financial update. So, Friday was a big day for markets because the jobs report came out, and the jobs report really blew away analyst expectations. Analyst expectations were sitting right around 204, 205,000 new payroll additions, and they came out and said, well, there was 254,000 new payroll additions, which is really a great sign for labor markets as a whole. Again, we've talked about the labor markets really starting to cool and contract, which is really where the Fed has been pushing the markets, especially as they have kept such a high interest rate environment. This recent interest rate before they made the cuts was the second longest rate pause in US and Fed history. So it was a very, very long time. But this was really, really welcome news to the market since historically September, as much as I would love for it to be, unfortunately, it is not always the best performing month. And historically, on average, it's one of the weakest months out of the remaining 11 months throughout the year. Now, being that we're already in the midst of October, I think the markets will still trend pretty nicely. With that in mind, we have the election coming up, right? So there's definitely sustained volatility. I mean, if you look at just the S&P 500, over the last week and what it's done from today, it looks really like a heart rate monitor, right? Up, down, up, down, up, down. And we've talked that there's just going to be sustained volatility. So with the elections coming up, again, it's likely that the markets will continue to be a little all over the place, but I think overall October will be more of a treat than a trick and hopefully not be too spooky for the Halloween season. So talking about rate cuts and where they're sort of trending is that there has been some news and some talk about the Fed lowering rates out of fear of a recession. I think that is still very, very unlikely. The rationale why the Fed is going to want to continue to lower rates is really the fact that current rates and where they're sitting are just simply too restrictive, right? We've seen people really shy away from taking on debt. Mortgage rates are still high, although they have started to climb down. And other loan rates, right? Car loans, really any type of debt out there, rates are sitting higher than most folks would like them to be. And the Fed has recognized this, right? So they understand that inflation is still kind of persistent, but they do need to start getting their restrictive rates back to a more eased on level, especially as the economy continues to just cool down and go at more of a slow and steady pace. So I think once they feel more confident of that pace, then the rate cuts will continue. They've made it clear they already do want to continue a rate cut before the year is over. So from a political aspect, don't worry. This has nothing to do with politics. The Fed is still on track, whoever gets into office, to continue their rate cut cycle. And I think that will be really important for the economy as we start to push into 2025. So with that in mind, we're really going to keep an eye on the markets over the next few weeks, right? The biggest headlines we're going to be seeing are all about the election, especially as folks start to ramp up with early voting and mail-in ballots. We're going to start seeing some conversations around that. And really, once it pulls into November, we'll have a clear-cut picture of who's going to take office in 2025. And then we'll talk about the impacts of the change of power and what that could look like for markets and the economies as a whole. So again, we'll just keep an eye on the markets over the next couple of weeks. Don't be surprised if there's continued volatility. I think the continued volatility will be very, very normal and honestly pretty expected, given the fact that geopolitical tensions are still not great. We talked last week about the issues of Iran and Israel and the horrors going on overseas. So, I mean, as long as these issues continue to persist, we're going to expect volatility in overseas markets and some commodity prices, especially oil. So with all of that in mind, we'll just keep an eye on the markets. And next week, we'll talk more about as the election approaches and give you another update of where the markets are at that point. So thank you so much for tuning in to today's video. And for those of you that are going to be attending our workshop tonight up at Arlington High School, I look forward to seeing everybody there talking about IRAs. And we're in the midst of our workshop season. So we're going to be doing a lot of events at 3 different school districts between Poughkeepsie, which is Arlington High School, Emerson, New Jersey, and Ridgewood, New Jersey. So if anyone is interested in signing up for these events, they're all listed online, or you can reach out to our office and one of us would be happy to help you get you signed up. So thank you so much for tuning in, and I'll see you next week.